Two great mysteries dominate our lives: love and money. What is love is a question that has been endlessly explored in stories, songs, books, movies, and television. But the same cannot be said about the question, what is money? It's not surprising that monetary theory hasn't inspired any blockbuster movies, but it was not even mentioned at the schools most of us attended. For most of us, the question, where does money come from, brings to mind a picture of the mint printing bills and stamping coins. Money, most of us believe, is created by the government. It's true, but only to a point. Those metal and paper symbols of value we usually think of as money are indeed produced by an agency of the federal government called the Mint. But the vast majority of money is not created by the Mint. It is created in huge amounts every day by private corporations known as banks. Most of us believe that banks lend out money that has been entrusted to them by depositors. Easy to picture, but not the truth. In fact, banks create the money they loan, not from the bank's own earnings, not from the money deposited, but directly from the borrower's promise to repay. The borrower's signature on the loan papers is an obligation to pay the bank the amount of the loan plus interest, or lose the house, the car, whatever asset was pledged as collateral. That's a big commitment from the borrower. What does the same signature require of the bank? The bank gets to conjure into existence the amount of the loan and just write it into the borrower's account. Sound far-fetched? Surely that can't be true. But it is. Check today. In the present, privately created bank credit is legally convertible to government-issued fiat currency, the dollars, loonies, and pounds we habitually think of as money. Fiat currency is money created by government fiat or decree, and legal tender laws declare that citizens must accept this fiat money as payment for debt, or else the courts will not enforce the obligation. So now the question is, if governments and banks can both just create money, then how much money exists? In the past, the total amount of money in existence was limited to the actual physical quantities of whatever commodity was in use as money. For example, in order for new gold or silver money to be created, more gold or silver had to be found and dug out of the ground. In the present, money is literally created as debt. New money is created whenever anyone takes a loan from the bank. As a result, the total amount of money that can be created has only one real limit: the total level of debt. Governments place an additional statutory limit on the creation of new money by enforcing rules known as fractional reserve requirements. Essentially arbitrary, fractional reserve requirements vary from country to country and from time to time. In the past, it was common to require banks to have at least $1 worth of real gold in the vault to back $10 worth of debt money created. Today, reserve requirement ratios no longer apply to the ratio of new money to gold on deposit, but merely to the ratio of new debt money to existing debt money on deposit in the bank. So, while the rules are complex, the common sense reality is actually quite simple. Banks can create as much money as we can borrow. Despite the endlessly presented mint footage, government-created money typically accounts for less than 5% of the money in circulation. More than 95% of all money in existence today was created by someone signing a pledge of indebtedness to a bank. What's more, this bank credit money is being created and destroyed in huge amounts every day, as new loans are made and old ones repaid. Banks can only practice this money system with the active cooperation of government. First, governments pass legal tender laws to make us use the national fiat currency. Secondly, governments allow private bank credit to be paid out in this government currency. Thirdly, government courts enforce debts. And lastly, governments pass regulations to protect the money system's functionality and credibility with the public, while doing nothing to inform the public about where money really comes from. The simple truth is that when we sign on the dotted line for a so-called loan or mortgage, our signed pledge of payment, backed by the assets we pledge to forfeit should we fail to pay, is the only thing of real value involved in the transaction. To anyone who believes we will honor our pledge, that loan agreement or mortgage is now a portable, exchangeable, and saleable piece of paper. It's an IOU. It represents value and is therefore a form of money. This money the borrower exchanges for the bank's so-called loan. Now, a loan in the real world means that the lender must have something to lend. If you need a hammer, my loaning you a promise to provide a hammer I don't have won't be of much help. But in the artificial world of money, a bank's promise to pay money it doesn't have is allowed to be passed off as money, and we accept it as such. Once the borrower signs the pledge of debt, the bank then balances the transaction by creating, with a few keystrokes on a computer, a matching debt of the bank to the borrower. From the borrower's point of view, this becomes loan money in his or her account, and because the government allows this debt of the bank to the borrower to be converted to government fiat currency, everyone has to accept it as money. Again, the basic truth is very simple. Without the document the borrower signed, the banker would have nothing to lend. Have you ever wondered how everyone, governments, corporations, small businesses, families, can all be in debt at the same time and for such astronomical amounts? Have you ever questioned how there can be that much money out there to lend? Now you know. There isn't. Banks do not lend money. They simply create it from debt. And as debt is potentially unlimited, so is the supply of money. And as it turns out, the opposite situation is also true. Isn't it astounding that despite the incredible wealth of resources, innovation, and productivity that surrounds us, almost all of us, from governments to companies to individuals, are heavily in debt to bankers? If only people would stop and think, how can that be? How can it be that the people who actually produce all the real wealth in the world are in debt to those who merely lend out the money that represents the wealth? Even more amazing is that once we realize that money really is debt, we realize that if there was no debt, there'd be no money. If this is news to you, you are not alone. Most people imagine that if all debts were paid off, the state of the economy would improve. It's certainly true on an individual level. Just as we have more money to spend when our loan payments are finished, we think that if everyone were out of debt, there would be more money to spend in general. But the truth is the exact opposite. There would be no money at all. There it is. We are totally dependent on continually renewed bank credit for there to be any money in existence. No loans, no money, which is what happened during the Great Depression. The money supply shrank drastically as the supply of loans dried up. that's not all. Banks create only the amount of the principal. They don't create the money to pay the interest. Where is that supposed to come from? The only place borrowers can go to obtain the money to pay interest is the general economy's overall money supply. But almost all that overall money supply has been created exactly the same way as bank credit that has to be paid back with more than was created. So everywhere there are other borrowers in the same situation, frantically trying to obtain the money they need to pay back both principal and interest from a total money pool which contains only principal. The big problem here is that for long-term loans, such as mortgages and government debt, the total interest far exceeds the principal. So unless a lot of extra money is created to pay the interest, it means a very high proportion of foreclosures and a non-functioning economy. To maintain a functional society, the rate of foreclosure needs to be low. And so, to accomplish this, more and more new debt money has to be created to satisfy today's demands for money to service the previous debt. But of course, this just makes the total debt bigger, and that means more interest must ultimately be paid, resulting in an ever-escalating and inescapable spiral of mounting indebtedness. It is only the time lag between money's creation as new loans and its repayment that keeps the overall shortage of money from catching up and bankrupting the entire system. However, as the bank's insatiable credit monster gets bigger and bigger, the need to create more and more debt money to feed it becomes increasingly urgent. Why are interest rates so low? Why do we get unsolicited credit cards in the mail? Why is the U.S. government spending faster than ever? Could it be to stave off collapse of the entire monetary system? A rational person has to ask, can this really go on forever? Isn't a collapse inevitable? Money facilitates production and trade. As the money supply increases, money just becomes increasingly worthless unless the volume of production and trade in the real world grows by the same amount. Add to this the realization that when we hear that the economy is growing at 3% per year, it sounds like a constant rate, but it's not. This year's 3% represents more real goods and services than last year's 3% because it's 3% of the new total. Instead of a straight line, as is naturally visualized from the words, it is really an exponential curve getting steeper and steeper. The problem, of course, is that perpetual growth of the real economy requires perpetually escalating use of real-world resources and energy. More and more stuff has to go from natural resource to garbage every year, forever, just to keep this system from collapsing. What can we do about this downright scary situation? For one thing, we need a very different concept of money. At one time, charging any interest on a loan was called usury and was subject to severe penalties, including death. Every major religion forbade usury. Most of the arguments made against the practice were moral. It was held that money's only legitimate purpose was to facilitate the exchange of real goods and services. Any form of making money from simply having money was regarded as the act of a parasite or of a thief. However, as the credit needs of commerce increased, the moral arguments eventually gave way to the argument that lending involves risk and loss of opportunity to the lender, and therefore attempting to make a profit from lending is justified. Today, these notions seem quaint. Today, the idea of making money from money is held as an ideal to strive for. Why work when you can get your money to work for you? However, in trying to envision a sustainable future, it's very clear that the charging of interest is both a moral and a practical problem. Imagine a society and economy that can endure for centuries because, instead of plundering its capital stores of energy, it restricts itself to present-day income. No more wood is harvested than grows in the same period. All energy is renewable: solar, gravitational, geothermal, magnetic, and whatever else we discover. This society lives within the limits of its non-renewable resources by reusing and recycling everything, and the population just replaces itself. Such a society could never function using a money system utterly dependent on perpetually accelerating growth. A stable economy would need a money supply at least capable of remaining stable without collapsing. Let's say the total volume of this stable money supply is represented by this big circle. Let's also imagine that moneylenders must actually have existing money to lend. If some people within this money supply begin systematically lending money at interest, their share of the money supply will grow. If they continually re-loan at interest all the money that gets paid back, what's the inevitable result? Whether it's gold, fiat, or debt money doesn't matter. The money lenders will end up with all the money. And after the foreclosures and bankruptcies are all filed, they'll get all the real property too. Only if the proceeds of lending at interest were evenly distributed among the population would this central problem be solved. Heavy taxation of bank profits might accomplish this goal, but then why would banks want to be in business? If we were ever able to free ourselves of the current situation, we could imagine banking run as a non-profit service to society, dispersing its interest earnings as a universal citizen dividend, or lending without charging interest at all. What we have been taught to believe as democracy and freedom has become in reality an ingenious and invisible form of economic dictatorship. As long as our entire society remains utterly dependent on bank credit for its supply of money, bankers will be in the position to make the decisions on who gets the money they need and who doesn't. The modern money-as-debt system was born a little over 300 years ago, when the first Bank of England was set up with a royal charter for fractional lending of gold receipts at a modest ratio of 2 to 1. That modest ratio was just the proverbial foot in the door. The system is now worldwide, creates virtually unlimited amounts of money out of thin air, and has almost everyone on the planet chained to a perpetually growing debt that can never be paid off.